Good afternoon, everyone. Good afternoon, everyone. Yeah, good afternoon, everyone. It's a pleasure to welcome you all in our today's session. My name is Neha Khandelwal. I'm a chartered accountant and I have more than 7 years of experience in the field of taxation. So I have an opportunity to work closely with the individuals and businesses, helping them simplify and manage their tax responsibilities with clarity and confidence. So in today's webinar, we will be discussing a very timely and important question as of now, that is what are the ITR checklist, Form 26AS, capital gain, FNOs, and few advanced tax details as well. So, as we enter into the peak ITR filing season, it's very crucial for every individual, whether you are a salaried employee, freelancer, or someone with multiple income sources, to understand the ITR filing process and the applicable deadlines and the documentation which is required to stay compliant plus stress free as well. So, let's start today's session. So let's start with ITR filing checklist, that is essential documents. So here are, I have mentioned few details which is mandatory to be compliant and to be ready with your ITR filings. So the yeah. Sorry for the interruption. So basically, I was detailing about the documentation which is required, essential for the ITR filing. So there are few personal or financial basics which are mandatory to file any ITR. So first one is the PAN card, and the most important thing is PAN card should be linked with your Aadhaar card. Your Aadhaar card, bank account details like your all accounts, IFSC, bank name, and pre-validation is also compulsory, at least for one account in which we want our refund. And we need to validate our mobile number with the e-verification process. So these are the personal and financial basics. So the income proofs. So basically, the upcoming documents are the proofs on the basis of which we finalize our ITR. So Form 16. If you are a salaried individual, your employer will provide you Form 16. And next is salary slip. So your month-wise salary slip should be handy to prepare or file any ITR. If you are having any interest for home loan, or if you are having saving bank account interest or FD interest, then interest certificate, bank statements, saving account, FD, other sources as well. If you are having a dividend income, then dividend income details. If you are having rental income, so basically your rent agreement, in which along with your tenant information, property details, if you have paid municipal taxes, then that receipt, home loan interest certificate if you have a home loan on the rental property. So for capital gains, sale purchase deed, broker statements for shares and mutual funds. So for an example, if you are investing through any of the share brokers, you have to download the PNL report, a tax PNL report, I can say, and with the help of that, you can prepare or file your ITR. For the business and professional income, your profit and loss statement, balance sheet, GST returns, invoices, TDS certificates. These are the necessary documents. If you are having any other sources of income like lottery or family pension, then the respective proof of that income we need to keep for the ITR filing. So these are few essential documents. So, what are the essential documents for taking the tax exemption or deduction? So, here are the list of those documents. So, for an example, if you are taking ATC, in which you can claim insurance, PPF, or LIC premium, tuition fees of your child. So, you need to keep all the proofs of those deductions handy because right now we need to put all the we don't need to upload any document, it's just we need to put the unique number of that basically policy number I can say or FD number while we claim the deduction in ITR filing. So we need to keep all these documents handy for ATC. Just similarly, if you are taking health exemption, then you need to keep the health insurance premium receipt. If you are taking education loan deduction, then you need to keep education loan interest certificate. If you are taking any other deductions like ATG, ATTTA, or any home loan interest or principal benefit, in that case, you need to keep all these documents which I have listed down here to be in a legal and compliant way to take exemptions and deductions. If you are making any payment, for an example, if you are making advance tax payment or if you are making a self assessment tax, you need to keep both the challans as well as a proof. So these are the few essential documents which every taxpayer should keep with themselves for ITR filing purposes and after the ITR filing as well, because we never know when income tax department comes up with any kind of clarification from our end. So it's always advisable to keep all the documents just to be legal and compliant as well. So now let's discuss what is Form 26AS. That is also called as Annual Tax Credit Statement. So basically 26AS is a consolidated annual statement issued by the Income Tax Department of India. This we can say it is a tax passbook basically, which is linked to our PAN number. So whatever transaction, whatever things we have done with our PAN number using our PAN number, all those details will be mentioned in the Form 26S. So basically, what are the informations which is included in Form 26S? So here I have listed down all of them. First of all, TDS, tax deducted at source. So details of TDS from your employer or bank. For an example, if you are having FD and bank is deducting tax on your FD interest, so detail of that and any other entities on which they have deducted any kind of taxes. So that will be mentioned in the Form 26AS. TCS, tax collected at source. So details of tax collected at source by the seller of specific transaction will also be mentioned in 26AS. If basically we have any kind of refunds from the department, that will also be mentioned in the 26AS. If we have done any high value transactions in the financial year, so those transactions will also be mentioned in the 26AS like mutual fund investments or foreign remittance, property purchase. These are generally called as high value transactions in India. So these will be mentioned in 26AS. If any discrepancies or default in TDS payments, those will also be mentioned in 26AS. And any other information which is pending or completed for the income tax proceedings will also be mentioned in 26AS. So this is a basically a picture about 26AS. What are the things which is included in 26AS? It is mostly related to the tax which has deducted by any person or any entity on our income or I can say related to that. So here basically why Form 26AS is important for any person. So we can verify our tax credits, obviously, because 26AS ensures that taxes, whatever taxes has deducted or paid on behalf of us have been correctly deposited with the government. We can verify that with 26AS because all the entries will be mentioned in 26AS. It prevents discrepancies as well, which helps us to cross-check the data from Form 16 and other records to avoid mismatch and potential notices from the department. It ensures accurate ITR filing as well because it provides a comprehensive overview of our tax activities for precise income reporting and claiming correct tax credits. This is a proof of tax payment as well, I can say, because this serves as an official record for loans, financial application, and for any other purposes as well. So these are few points for which 26 years is important for any taxpayer in India. So now let's discuss what is advanced tax. Okay. So I can say advanced tax is like pay as you earn. Whenever you have any income, you should pay taxes on the same at the same point of time so that you can avoid interest and penalties at the later point of time. So what is advanced tax? So income tax paid in installments throughout the financial year is called as an advanced tax. Okay. It is also known as pay as you earn tax. Okay. So this is mandatory if the tax liabilities is more than 10,000 or more than 10,000 basically, then it's compulsory to pay the advance tax on a real time basis. So what are the purpose and benefits of paying advance tax? So for government, definitely it ensures a steady revenue flow, and for taxpayers, it is beneficial because it is a better cash flow management. It avoids penalties like interest under Section 234B and C, and it promotes tax planning throughout the year. So who pays the advance tax now? So salaried individuals with other significant incomes like rent, capital gain, interest, freelancing income, which is not fully covered by TDS. On that part of income, we have to compute our taxes and we have to pay taxes on our own. So these are the incomes. If you are having any freelancing income or any business or profession income, so these freelancers or business owner professionals has to pay advance taxes. Individuals with capital gains, if NRI is having Indian income, then that person has to pay advance taxes. Companies and firms. So basically, these are the basically entities I can say who needs to pay advance taxes. So basically, there are a category which is exempt from paying advance taxes without any interest and penalties. So if you are a resident senior citizen, that means if you are a 60 plus years in India, and you are not having any business and profession income, you are having any other sources of income. So in that case, you are completely on the 15th of the last month of that quarter, we need to pay the advance taxes. Okay, 15%, 45%, 75%, 100% accordingly. And if you are having a if you are going for the presumptive taxation, 44 AD or 44 ADA, in that case, you can pay 100% before 15th March as well. So basically now let's discuss what is refund as per Income Tax Act. Okay. So as per Income Tax Act, refund is the amount which is returned to a taxpayer by the Income Tax Department. Okay. This occurs when tax paid exceed the actual tax liabilities for that assessment year. So just for an example, if you have make a payment of tax of rupees 1 lakh, and the net tax liabilities which is coming after taking all the exemptions and deduction is only 80,000, in that case that excess 20,000 which you have already paid to the government, that will be returned from the department to us, and that is called as a refund. Okay. So when does the refund arises? So basically, these are the common reasons why refund arises: excess TDS, advance tax or self-assessment tax paid, as I have already mentioned, claiming eligible deductions and exemptions, error in tax calculation, double taxation. So basically, these are the few common reasons why refund has been arises. And refund can be proceed after filing and e-verification of return income as well. So basically, government also pays interest as well on the income tax refund if they doesn't pay it on a timely basis. So the interest which they pay is basically simple interest calculated with 0.5% per month or part of the month. That means 6% per annum. Okay, and that will not be more than 10% of your total tax liabilities. So basically, these are the few I have mentioned here, the few period of interest and other relevant things which is related to the refund. Okay. So how you can maximize your income tax return, refund basically. This is the most important thing everyone asks, like how I can maximize my refund in the ITR. So the core principle in this is if you accurately report your all income and claim all the eligible exemptions and deductions, so you there is a chance you can get a refund as well from the department. And the strategies to do this, basically to maximize your refund, is we need to declare all the income sources accurately, including salary, interest, rent, capital gain, freelancing income, dividend income, whatever sources of income you are having. And we need to ensure that full income declaration, if basically if any income which is on which TDS is deducted or not, we need to declare all the income. Okay, we need to reconcile it 26 days and AIS as well. We need to cross verify TDS TCS details with your ITR claims to avoid mismatch and delays. Okay, so these are the key strategies to maximize your refund. We can there are a lot of exemptions and deductions which government is providing. Okay, it's like how we utilize those exemptions and deductions. So just for an example, 80C, 86, 81B, 80D, 24B, 80E, there is a list of sections in which government has provided us proper exemptions and deductions. If we are investing our money in those schemes or like that way, or if we are following under those categories, we can claim those exemptions and deductions if we have proper documentation and if we are fulfilling those conditions. So we need to strategize our finances in a way that we can utilize maximum of the sections of income tax department and we can save our taxes more. Okay. And basically, one most important thing is we need to pre-validate our bank account as well to ensure that our refund will be credited on a timely manner in our bank account. We need to e-verify our return because without e-verification, refund will not proceed. And most importantly, definitely we need to file our ITR on a timely manner so that refund will also be proceed in a timely manner. Now, let's discuss the next topic, which is capital gain. So, yeah, what is capital gain first of all? So, profit from selling a capital asset, either property, shares, mutual fund, jewelry, whatever it is, on that asset, whatever gain you are having, that is called as a capital gain. Okay, so how it is basically there are two types of capital gains: short-term capital gain and long-term capital gain. So basically, what is called as a short-term capital gain? What is called as a long-term capital gain? People are confused whether I'm selling it in a short-term way or a long-term way. So here I have defined it. So if you are, if your the asset which you have sold is for a short period, that means if you are holding it is less than 12 months in case of shares or mutual fund, or in case of property less than 24 months, that in that case if the holding period is this much, in that case it is called as a short term capital asset and the gain on which is short term capital gain basically. Now, how this is taxed? So this is taxed as a normal or a specific rate. I will describe this later point of time as well. Okay. Long-term capital gain is an asset which you sold after short-term period, definitely more than 12 months, or in the case of property, more than 24 months. Okay. So this is basically often taxes as a concessional rate as compared to the short-term capital gain. Okay. And we can have an indexation benefit as well in the long-term capital gain. Now, here I have mentioned what is the calculation of capital gain, how we can compute our capital gain. So definitely gain is the sale price, less cost, less expenses, okay? And we need to report this gain in the head of income from capital gain, okay? In the ITR 2, I have just mentioned this as an example. In ITR 2, if you do are not having a business income, or ITR 3 if you are having a business income, okay, and the details which is required to mention in the capital gain head is acquisition or sale dates, cost, sale value, expenses or exemption. These are the few details which is required to compute any capital gain and to report into the ITR as well. Okay. So now the most important thing is how we can save our taxes and capital gains. There are few common, I can say exemptions, or I can say we can basically strategize our capital gains in a way that we can save our taxes as well. So there are few sections like 54, 54EC, 54F in which we can reinvest our capital gain, and with the help of reinvesting, we can save our taxes on these capital gains as well. Okay. So Yeah. So now, as I was saying earlier, so these are the rates on the capital gain, or so on the short-term capital gain. Okay, so the rate is 20% flat. Okay, and on the equity or equity mutual funds, I can say, or any other assets, it is slab rate in India. Okay, no indexation benefit we can take in short-term capital gains. Okay, so now long-term capital gains, 12.5% is the rate on gain on more than 1.25 lakh rupees of gain. Okay, so till 1.25 lakh rupees, we don't need to pay any taxes. If we are crossing 1.25 lakh rupees on the excess amount, we need to pay 12.5%. Okay, so this is for the equity or equity oriented mutual funds on which STT paid. So on any other assets, this is 12.5%. Okay, without any limit basically. And for the immovable property, we have an option if either we can go flat 12.5% without indexation or 20% with indexation. Okay. So there will be a surcharge and cess as well, which will be applicable on these rate of taxes. So now let's discuss what is future and options in ITR. Okay. So the income which is classified in futures and options is the profit or losses, which is are from non-speculative business income. Okay, treated as a business income, non-capital. These are not capital gains. First of all, these are treated as a business income. If you are having any F&O income, okay. So next is which ITR form? So ITR 3 form is the most common form which is used by the individual HUF with business and professional income. Okay. You have an option of ITR 4 as well if you are going with the presumptive taxation scheme, but there are few conditions for that. If you are following in that category, you can go with that as well. So how we can calculate it? So I have mentioned for future sum of absolute profit and losses, and for options sum of absolute profit and losses and premium received on sale as well. Okay, so now the main thing is the tax audit, which is very crucial in FNO, and people are not aware about tax audit requirements in FNO cases. Okay, so the section is 44AB. Okay, this is mandatory if you are following under these criteria. Your turnover exceeds rupees 10 crore. Okay, if your turnover is between 2 to 10 crore and declared profit is less than 6% in case of digital and 8% in case of non-digital, and the total income is more than basic exemption limit. If you are opting out of presumptive scheme, so these are a few conditions in which you have to mandatory get your tax audit done under FNO option. Okay, how you can here I have mentioned how you can manage your losses as well, so you can set off it or you can carry forward it up to 8 years. Okay, but to set off and carry forward it, you must need to file your ITR within the original due date to carry forward the losses. Okay, so here are few deductible expenditures from FNO income. So these are business related expenditures. Basically, these are expenditures with which we can basically save a little bit of taxes as well. So brokerage and transaction charges, internet and telephone, software platform subscription. There are few examples which I have mentioned here for which we can claim against this. Okay, and we need to keep the important point is here we need to keep proper documentation, contract notes, bank statement, bills, everything for all these claims. So yeah, that's it from my end for today. Thank you so much for your attention. We are now open for the Q&A session. If you are having any questions, feel free to ask them. I'll be happy to answer all of them with best of my ability. Okay, so the question which we are having is where can I download my Form 26A? So yeah, you can download it from the income tax portal. You can log into your income tax portal, and then in the dashboard there is a like proper basically you can go to the e-return, and then you can go to the filing sections, and from there you can download the Form 26S. You can download it basically from your IT portal. Okay. So the next question is what is advanced tax and who is required to pay? So yeah, I have already mentioned it. Like advanced tax is a tax which you need to pay on an advanced basis on the income which you are earning and on which TDS has not been deducted. Okay. So the next question I have, what happens if I don't pay advanced tax on time? So yeah, if you don't pay your advanced tax on time, you need to pay interest and penalties as well. Okay. And the interest will be 1% per month or part of the month. Okay. The next question I have is interest paid on refund taxable? Yes. So basically, as I already mentioned, IT department will also pay us interest if they are not giving us refund on a timely manner. Next question I have, can I file my return without Form 16 from my employer? No, it is not advisable to file your income tax return without Form 16. But yes, if your employer is the worst case scenario is if your employer is not providing, we can have your details from your salary slip or with AIS, TIS. With the help of that, we can file your ITRs. What are the due dates for paying advance tax? So yeah, I have already mentioned 15th of the last month of the quarter, we need to pay the advance taxes. Next question, can I claim both standard deduction and professional taxes? Yes, you can claim both standard deduction and professional taxes as well. Okay. So yeah, thank you so much for joining us today. If you are having any queries, you can download the Uniqey app, and there is a free chat option. You can go to there and you can ask your queries in that option as well. And for accurate and timely filing of your ITR, you can have an uh, expert help as well through Uniqey by JJ Tech. So you can purchase our ITR filing services, and we will be helping you with the timely and accurate filing. Thank you so much, everyone, for joining today's session.